Good afternoon. Thanks for tuning in. You're watching Ask BQ on BloombergQuint Live, and I'm Navneet Saluja D'Souza.
Hi Navneet, I'm Alex Matthew. Happy Dhanteras to all of you. Thanks so much for tuning in. I'm sure all of you have questions now that you're tuning into this show. If you've got those questions on equity, you can send them to us on any one of our social media platforms, or you can call us on 022-454-04141. You can also mail us in advance at askbq@bloombergquint.com, but just make sure to add the AskBQ hashtag.
Okay, and wishing all our viewers a very happy Dhanteras and a very, very happy Diwali. Before we get to the individual queries, let's quickly tell you what's happening with the markets right now. The pattern is actually same. Yesterday also, there was selling seen from the higher levels when we open, and that continues even today because we did have an opening in the positive. In fact, the high levels are 11,646. So from those, around 80 points has been retraced from the higher level. Sensex down about 48 points as we speak. The broader markets are also mixed in trade, I believe. Pull up the small cap as well as the mid cap indices. Yep, they too have given up the gains, and the market breadth is just about even, Steven, or maybe declines would have taken over. Yes, in the last 15 or 20 minutes, we have seen more selling coming about. Pull up the Nifty contributors list. Gives you a better picture, actually, which are the stocks that's dragging the index lower. So, dominated by heavyweights. HDFC, Reliance are down, which is dragging the index lower, and some support coming in from ICICI Bank, and SBI comes out with its numbers today. Ahead of that, some positive tick seen, and recovery continues for Infosys. Ahead of the numbers, by the way, main Nifty constituents which are in focus, SBI as well as Tata Motors are the two stocks which are in focus. Of course, not great set of numbers expected for Tata Motors, and the stock ahead of its earnings is already down 4%. SBI was down 4 to 5% yesterday, so some recovery seen ahead of the numbers. Some results reaction also coming your way. Interglobe Aviation, the numbers were not good. Cautious commentary coming from the management. They posted a loss of about 1,062 crore. As you can see on the screen, clearly the stocks reacted negatively, down about 10%. Sterlite Tech also, the numbers were not good. In fact, the commentary was not that great. Cautious outlook for the second half where the profitability could be impacted. Strides Pharma, United Spirits are the other two stocks which are in focus. United Spirits number were not that great, but still the stocks up and about, and Strides Pharma for the second day in a running has reacted positively. On the losing side, Piramal is in focus, and the stock's fallen after the board has approved fundraising of 5,400 crore via convertible bonds as well as rights issue, and post that there was a sharp selling pressure seen. Remember, after the numbers came in of Piramal, there was some recovery seen for 3 to 4 session. Looks like it's given up all those gains. Century Textiles was rallying in the past few days with some profit booking seen for that stocks, for that counter. And just two stocks I want to highlight from the insurance space. You've got GIC and New India Assurance, which continues to do well in today's session. In fact, if I'm not mistaken, they're locked in upper circuit.
All right, well, let's get our two experts in for the day. We've got Sharmila Joshi, who is an independent investment advisor, and we've got Aditya Agarwala in studio. He is, of course, of Yes Securities. He's here to answer all of your questions today. I'm going to start actually with a check, Aditya, on any picks that you have, and how do you see the benchmarks going in the near term?
So first I'll talk about the benchmark indices. I believe markets can consolidate for some time, and it's a matter of time before Nifty actually breaks out of that resistance mark of 11,700 and head to levels of in excess of 12,000. So my sense is by the end of the year we should be much elevated levels from what we are trading at current levels. And probably if we talk of next year, probably next year could be the year for small caps and mid caps. Not a bad space to be in next year. Just wait for some more correction, and probably small cap and mid cap will be the place to be.
Since you highlighted that, Aditya, last year was challenging. From last summer to this summer, Nifty could be up 10 to 11%, but mid cap and small cap indices have been down for second summer in a row. So clearly there is a bit of selling pressure or deterioration of stock prices, which was seen for all these broader market stocks. But having said that, Sharmila, happy Dhanteras to you. Are you recommending to buy equity or gold today?
I think I would always recommend equity, and if you want to give it a gold angle or a commodity angle, that would be nice. So maybe you could buy a Titan and take an exposure to gems and jewelry, or you could buy MCX. I think, after the kind of numbers that MCX delivered, that's a great stock to look at, because I think commodity business has a long way to go in the Indian context, because, globally commodity businesses are in fact far larger than the equity business. Again, I think the derivative businesses within India, whether it is equity or commodities, is a long way to go, and in the commodities part of it, it's in a very, very nascent state. So I think MCX is a great stock to look at, even after the kind of run it's had post, I think, which I thought was a very good set of numbers.
Okay, I want to come back to you, Sharmila, on a query that we got ahead of time. This one is a Twitter query from Kunal Prajapati, and he's talking about a stock that has been in focus, of course, because of earnings, and I'm talking about ITC. It's one of those companies that actually got the tailwinds, shall we say, of the cut in corporate tax rate, and it saw a stellar performance in terms of profitability. Its net profit, I believe, is the highest ever quarterly profit. Operationally also, I believe that it's an inline set of numbers, but certain volumes, I believe the cigarette volumes were higher than they were anticipated. How are you rating the performance, and on the fundamentals, would you recommend a fresh entry?
Well, 2-3 things about ITC. Firstly, I mean, right on, let me say that it's a stock that I like, I also own. But there have been concerns, I think, over the last 2 or 3 years, because it's been very, very range bound. And of course, I think the reasons are very well known. It's the kind of taxation that you have on cigarettes as a business and the concern that there has been, in terms of the volume growth there. And I think, again, if you look at it in a global context, the cigarette business does seem to have like a shelf life, which is why I think the company is also sort of, getting into other areas where which could add to their bottom line. But so far, we haven't really seen a significant contribution from either their food business. I mean, they have a whole host of businesses. They are in IT, they are in hotels, they are in paper, they're in an agri business and the food business, which they have rolled out. But none of these are really contributing as significantly to the bottom line as the cigarette business. So I think that's what I would really wait to see. But given the price that it's at, the valuation it's at, and the fact that the numbers were good, I think it definitely warrants a look. But as I say, you have to take this with the caveat that this stock has been extremely range bound these last 3 or 4 years.
Okay, that's the view on ITC. The stocks reacted positively. The argument has been it's trading cheaper. It's actually 1 year forward earning is 20 times, which is way, way cheaper than its peers, but not sure how good it is to compare ITC to its peers, considering majority of the business comes in from the cigarette space. But moving ahead, let's start taking some more queries, and this one comes in from Harish Kumar. I'll come to you on this one, Aditya. He has a query on Sobha. He wants a 3-month view. He's already taken a position of about 100 shares. He's bought the shares at 480 rupees. The stock's at 426, so it's below his buy price. What would you advise him to do?
Clearly, the stock is in a downtrend, making lower lows and lower highs. I would recommend put a stop at 425, because if 425 is taken out, stock will head lower, much lower to levels of 380. So it makes no sense holding on to the position. Put a stop at 425 to 424, which is just 2 rupees away from CMP. If that is taken out, you should be out of the trade. Don't stay invested here.
Okay, Harshvardhan has wished us a happy Diwali. Wish you the same, Harsh. Thank you so much for tuning in. You bought Edelweiss at 167 and NOSIL at 155, and what you're asking is whether you should hold for the long term, and in fact, if you should average at the current market price. How do you rate these two counters, Sharmila, on the fundamentals? Do you think it's a good idea to hold on for the long term if it's part of your portfolio?
Well, I think both have sort of a mixed reaction. Edelweiss, because I think, because of the concerns that were, to their book, their ARC holdings, etc. So I think there is a word of which market has taken into note, and which is why you see it reflected in the price. And I think NOSIL overall, because of the way the numbers and the environment has been. So I think they're both okay sort of stocks if you are holding for the long term, but I really wouldn't recommend averaging at this point in time. Let's wait to see the numbers and then take a call from there, but not terribly excited about averaging either of the stocks, very honestly.
Okay, that's the view on NOSIL. Anirudh Gupta has written to us, and he has a query on Infosys, Aditya. He's asking if he should look to buy the stock now at current levels, though he wants to buy for long term. But technically, is this the right level to enter after a 16% fall that was seen day before yesterday, when the stock also slipped below its 200-day moving average? It's taken support definitely around the 600, 620 levels. what would you suggest doing?
I would wait for some time to get into Infosys. I believe last time when I was on the show, I'd recommended not to get into Infosys. There was some weakness which was shown on the chart, and it has percolated to that. And I believe there's some more correction and pain left in the stock. Somewhere around 600 is where I would be more comfortable getting into the stock, not at current levels. This consolidation and support with the stock has taken, it will give away in some time, and will head to levels of 600. So that should be your area where you should look to get into the stock, not at current levels.
Okay, let's take a question from Voice of the Lamb. I believe that we've got Shalom Ranga on Facebook who's got a similar question. It is on IDFC First Bank. What Shalom is asking is it a bank that can in the future pose the toughest competition with Bajaj Finance from the NBFC space and HDFC Bank? Completely different models, I must point out. But Sharmila, if we're talking about these three, because Voice of the Lamb really wants to know whether IDFC First Bank can become an HDFC Bank going forward. So I guess really it's a question of which one would you pick?
Oh, well, very honestly, at this point in time, I would still pick HDFC Bank because, at the end of the day, where they are today in terms of the size that they are at and the kind of numbers that they're delivering at is really something which is extraordinary. I mean, quarter on quarter, the kind of numbers that they've been able to give over the last 3 or 4 years has been pretty fantastic, given the fact that they're growing now from a large size. But yes, I think, everybody in the market loves to discover a stock at an early stage, and IDFC Bank has been first, with now Capital First merged into it, has been spoken of in those terms that, this could be the stock that could really go to the next level. But very honestly, I think it's early days yet, and we've seen many fail because of one bad trade or one bad loan that they may have taken, which sort of brings the price down. Yes Bank was also supposed to be as a point in sort of references. Yes Bank was also supposed to be one of the challengers to HDFC Bank, and so we can see what has happened to that. So I would really tread with caution. I mean, in one sentence. So the last quarter numbers I think were fairly okay for IDFC First. But honestly, so far it has disappointed, and so I think we need to give it a couple of more quarters, see whether they are really able to deliver on the things that they have promised, and then take it from there.
In fact, most of the market experts, Alex, we've been talking to this, they say that don't look out for next HDFC Bank. The next HDFC Bank will be the next HDFC Bank only, not any other bank. But having said that, I just want to revisit the markets. I think there is some selling pressure which is visible. We are at days low. Nifty is now trading around the level of, mind you, we breached last 2 days support of 11,550. We were taking a support there. Some U-turn buying interest was seen around those levels, but that's been breached today. So 11,500 probably will be the next level that we'll watch out for. And the fall has come in. We were just talking about HDFC Bank. It's a heavyweight on both Nifty and Bank Nifty. That stock's sitting at days low with cuts of about nearly 1% right now. Mild bit of recovery, but still I think the banking stocks are dragging both the indices lower. Having said that, and sticking on to the banking space, Aditya, Bandhan Bank came out with the numbers day before yesterday. One of our viewer wants to know what can be the target price here.
So this is one of the stocks which has actually bucked the trend and went and headed higher. 640 is where I would be looking to book out profits. On the downside, 560, 550 is the support zone. That area is your 550 should be a stop loss, and 640 should be an initial target. If it crosses 640, then my sense is it can head all the way to 680 as well.
Okay, let's pull up Pfizer if we can. We've got Mayank who is asking about Pfizer, and he's holding at levels of 2,900, and he's hit an all-time high, or rather the stock has hit an all-time high, is what he points out in trade today. It's come off from those elevated levels, currently trading around 3,477, but doing well, about 2.4% higher. He's got a view for the next 2 to 3 years, Sharmila. So I guess the question is, based on the fundamentals, are you convinced that he should hold on for that time?
Yes, I think you can, because I think 2 reasons. One is the fact that we've overall seen that in the pharma space, the domestic and rather the MNC pharmas, which are listed in India, have in fact had a very good run these last couple of years. Simply because, in terms of business model, there has been more safety in the MNC pharma play than the export-oriented domestic companies, where, we've seen the kind of concerns they've run into, the hurdles with US FDA, etc. So I think from that point of view, and the fact that Pfizer, with the kind of numbers they've delivered, etc., makes it a good stock to hold on to, even within the MNC pharma space. So, and if you have a 2-3 year horizon, definitely why not? So I think yes, you can continue to hold Pfizer.
Okay, that's the fundamental view on Pfizer. We've already discussed ITC fundamentally. The numbers came out yesterday. The cigarette volume growth was in line with what the street was expecting, but a lot of queries also coming on the technical side. Aditya, whatever rally we see, I think the stock for the longest time has been languishing between the range of 230 to about 260 or top it to 270. Akshay Mittal's got a position at 260. What would you advise him to do?
So you actually pointed out that stock hasn't done anything for the investors or for the traders. Just languishes around 270, 280 on the upside and 230, 240 on the downside. So you can actually place a stop somewhere around 240 and wait it out. But I'm not too bullish out here because it continues to face a stiff resistance at 260 until unless stock closes above 260 on a higher time frame. I would not be bullish on the stock. I would just avoid trading into it. But if you have a position, place a stop at 240 and hope that the stock heads above 260.
Okay, Ishani Shah has got an interesting query, which I think a lot of people have spoken about on this program, which is how averaging should be done. And she's asking whether averaging should only be done on falling stocks or should it also be considered being done on rising stocks, especially with the fundamental perspective, if you're convinced about the fundamentals of a stock. And in fact, I must point out that Aditya, who's sitting right beside me, has on several occasions pointed out that you should not ideally average on the downside, and when there is recovery, you should consider averaging on the upside. But you know, I want to go across to Sharmila, since your question is of a fundamental nature. Sharmila, if you've studied the fundamentals of a company, if you're convinced that it will bounce back, obviously the question is, should you average on the upside?
Oh, so this is a tricky question because I think you need to really combine both the skills here. Because yes, if you are fundamentally convinced that this is something that is going to blow over and there is enough merit in the business to last, the current crisis, then yes, I think you could consider averaging. But it's a very, very tricky question. For instance, I think Infosys, case in point, is worth averaging because I think this is a business that will outlast, the current concerns that they have. We've seen it outlast this thing in the past as well. So this is definitely one stock where I would stick my neck out and say, yes, you could consider averaging given that it has fallen 15-17%. But again, I think in Infosys, if it just continues to fall more and more and more, then again, even for Infosys, it will become a question mark that, why is it that buyers are not emerging at any price? Which is when we'll have to really re-look at it. So yes, I think you need to be convinced about the fundamentals of the business and you have to take a really long and hard look at what is happening and then take a call. And ideally, you should not look to average till at least it's below, I would say, 20% from the price that you bought at.
And since we are on the topic of averaging, Raghunathan writes to us and he's holding Tata Motors at 230. He wants to know if he should average now. I know your answer, Aditya. But Tata Motors fundamentally, if one were to look at it, both domestic as well as international business, that's the JLR business, both have been going through a structural slowdown, so to say. But, a lot of investors have been stuck in this one, even at higher levels. 230 is still fine. I know of investors who keep writing to us and they've bought the stock around 400, 450. What should be the ideal strategy now? Because for someone to book losses at these levels, it could be jittery for them as well. So what should be the right strategy?
So this is again a very tricky question for me as well. What should be the ideal strategy? Because if somebody approaches me and tells me I bought it at 400, at 120, what do I recommend him? But I would still recommend put a stop somewhere because you have to minimize your loss at some point of time. You can't allow the stock to go down to 20 rupees, 30 rupees and then come back again and ask me the same question. It's better to book out whatever loss you are making. I know you're making a significant loss, but it's better than booking out a loss at 20 rupees or 30 rupees. I'm not saying that the stock will fall to 20 rupees or 30 rupees, right. But I'm just giving an example. We have witnessed several examples of the same, like Graphite, RBL Bank. There are multiple examples where stock continues to fall, and you have to curtail your loss at some point of time. So as far as Tata Motors is concerned, from what I look at the charts, 105, 107 has for the time being acted as a strong support. From there, stock has bounced back on higher time frame charts. So an idle person who's holding on to it for quite some time, for months or years, levels. 105 or probably rounded off to 100 rupees should be a stop loss. If that is taken out, the next immediate support that the stock shows is 60 rupees. So you'll again fall down to by 40 rupees. So it makes sense to exit once the stock breaks, say 100 rupees, and look at other stocks, other counters, because money has time value. You don't want to stay invested in a stock which is not going up, right, basically.
I want to quickly point out, of course, that Tata Motors results are today, and you'll find a lot of information, of course, from the results per se and the commentary. A lot of moving parts there. How Jaguar Land Rover is doing, what the future of Brexit is likely to be, what the demand scenario in China is going to be, and also, of course, domestically, whether the commercial vehicle business has any signs of recovery. But I want to quickly take a few more questions if we possibly can. SBI, Sharmila, is going to be reporting its numbers today also. How do you see this from the PSU banking pack? Let's keep it a little short so we can take maybe one more question.
Yeah, I like it, but let's wait for the numbers. But if the numbers, especially NPAs, are okay, then I think we can go for this stock.
Okay, that's SBI. We'll watch out for the numbers, and asset quality trends will be keenly watched out alongside provisions. But Bank of Maharashtra, Aditya Preetham has suggested, I think the stock's up about 12 to 13%. I don't know how liquid that stock is. So, okay, I think I'll leave that out. We can take some more queries. Adani Transmission, a technical view there, next 1 month.
So stock has been on an uptrend, a strong uptrend, continues to make higher highs, higher lows. Put a stop at somewhere around 250 and look for a target of 285 to 290 in the coming weeks. You should be there.
Very quickly, SBI on the charts, would you recommend a fresh entry?
Yes, I would. Put a strict stop loss at 240 and look for a target of 300 to 310 on the upside.
Okay, unfortunately, Jason, I don't see your question, so I will have to take it on the next edition, which is on Tuesday. But I'd like to thank both our guests, Sharmila and Aditya, for helping our viewers with all the queries that you did answer. Wish you both a very happy Diwali from all of us here at BloombergQuint. And in fact, to all of you who are watching, thanks so much for tuning in, and wish you all a very happy Diwali.
Do tune in. We'll be covering the moderate trading session on Sunday as well. Stay tuned to BloombergQuint for more news and updates.